The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Hope everyone had a good weekend, long weekend. For many, it was a holiday weekend. Easter and Passover, season of renewal. And this is a very interesting time, because when you look at the market at this particular point, you're seeing a very sharp decline. The Dow, 140 points down. That's one of the deepest declines we've had in a while. 16 points, 17 points in the S&P. But when I go through, and over the weekend I went through quite a lot of the IBD top 50, it is really fascinating. It's as if the fund managers are still looking for entry points and buying points rather than selling points. Because, and I'll go through this in a moment, if you look at the top IBD 15, 20 stocks, most of them are actually doing pretty well today, at least at this particular point. My suspicion is that by day's end, if at 1:35 this afternoon Eastern Time, the Dow is down more than 135 to 147 points, we will close very poorly. So when I look at the overall market, and what I say to my subscribers, my service is the opening call. Opening call is a daily service that comes on. I start sending charts from 6:30 or so in the morning Eastern Time. 8:35 is my 8:40. That's my final one, and that's my Traders Corner. And that's what our positions, what we have, what we're looking at, what the stops and the buy stops are. Stops if we are long, buy stops if we are short. Now, you can be long, but you can be long a short position, because with those ETFs over the last 6-7 years, we've had a really interesting period, because for the first time in market history, the layperson has been able to go short the market without shorting the stocks. And that is by buying an ETF that is made up of stocks that have been shorted. So you are going long, you are buying a position that in fact is a short position. And that wasn't available before. Not only that, it was certainly not available for most IRAs or any of those investment plans that you were looking at, that basically came under the auspices of the tax code. So now what we're looking at is something completely different. Many people, in fact, I would not be surprised if over the last 3 years, a lot of people have lost more money by shorting this market, especially since they added those doubles and triples. So I'm waiting for them to add the sextuples or something. Because if you're wrong and you don't quite understand how those work, you can see a 30 to 35% decline in your portfolio really quickly. And because of the makeup of these darn things, if you were shorting every single one of them, just about, I haven't looked at the most recent ones, but almost all of them over the last many years, as they became IPOs, as they were introduced, you'd be making a fortune, because almost all of them are down. Some of them are down huge. In fact, why isn't there some kind of convening of you have all these looking at the banks, etc. Why isn't there something going on here looking at these particular mediums of trading? I wasn't going to even get into this. How did that happen? Well, it should be looked into. The fact that they depreciate, even if you correct over a period of time, is just, that's wrong arithmetic. That's just not what they were supposedly in the beginning, what they were portended to be. So, with that said, let's go through what we want to look at here. Let's go to the Dow. My opening call subscribers, we know that we're in a sell, we're in from a sell signal, and there will be a sell mode in the daily upgrade if today the Dow closes underneath 12,970, 12,950, that area. What does that say? It says that there's price and time involved in the daily chart. The weekly chart, peaks seen in the weekly, having made new recovery highs, I should say, going to the highs of the 16th, the week of the 16th of March at 13,289. How many times am I supposed to write that in? I'll do it again. 13,289. That says that the weekly chart and the monthly chart are telling me that this should be a consolidation. It'll become more of a correction if Dow 1,700 is taken out over the next coming 2 days. But this is very interesting, because when you put it into the context of the weekly chart, although the MACD is turning down, the stochastic's turning down, stochastic's still at 85%. Hey, 2 hours into, not even 2 hours into the first day of the new trading week, a full week, in fact. I'm not going to say anything about where it is right now, but I will tell you that this could be the first week that the weekly chart closes underneath the 9-period exponential moving average. If you learn just one technique in your trading, how to use the 9-period exponential moving average, it's just, I've had webinars that I've done on this. It is really an important ingredient in my work, and I believe in a lot of people since I've been introducing it over the last many years. Now, what would happen is it would be the first close since the breakout of the week of the 2nd of December. So how's that for a nice technique to use? The MACD hasn't yet crossed negative, and it will if the Dow continues lower this week. And the stochastic, as I say, is at 85%. And if there is another 200-point decline, then certainly the stochastic in the weekly will go underneath 80%. But all the technicals are still saying that there should be support. It could be a 10 days to 2 weeks consolidation. It could actually end up being steep, using price but not time. It could use time but not price. If it suddenly finds support, the Dow finds support in the 12,800, 12,750 area. We'll see. I don't care at this particular point where our bias is now to the negative side, to the short side. It's working. You just can't complain if it's working. That's the way it is. I am upset because our core positions, I know that we're going to see depreciation in the fabulous percentage gains that we've had. I want to try to keep these. I'm determined, as I was when we bought the Dow Diamonds, the low of March the 6th, not the 9th, but March the 6th was the Dow low in 2009, and I held it through thick and thin, even though I was absolutely sure that we would be taken out. We weren't taken out until 18 months, I think it was, later. And then, of course, what we did is we got into GE as a very low-priced Dow proxy for the Dow, which has actually given as good, if not better, a percentage gain since the entry in the beginning of December. That was just a strategy. Now let's just go to the reality of what we're looking at. In the context of the monthlies, I won't be able to show it now. I actually took it away, but maybe on Wednesday I'll be able to get to it. There is a point and figure chart that takes me to a leg E in the monthly chart of the Dow. Now, the way the point and figure chart is, it's not a time-based, it's a price-based technique. And what I'm looking at here is that there's a chance that I have to be realistic. We made a leg E up in the monthly chart of the Dow. It went above and closed above the 12,876 high of 2009. There is every reason to believe that we might see no new recovery high in April, which means that I've now got a peak E, that's the 5th highest peak in the Dow. And in the ChapmanWave, when you get to the 4th, the 5th, 6th highest peaks, that's where you need to have some caution. It just says yellow light, red light pertains to certain levels that you break on the downside. At this point, we haven't even made a peak for April, but there's a high of 13,289.08 in March and 13,297 in April. March. Yeah, that was the first day of April. That was the 2nd of April. That says that we cannot get a peak, not we, the Dow cannot get a peak E in the monthly chart until the very last day of May, the last trading day of May. Let me explain this. This is a concept that some people have found hard to fathom based on the word. So if you're looking at Tiger TV, let me just explain what I'm looking at. It's a lot easier. If you're listening on the radio, I will try to articulate this as clearly as I can. Number to call here will be 877-927-6648. Let me just, this preamble, I'd like to get it through because this is really an important. Last week was a very important week, as I said. I've made my conclusion based on last week. This is the important week for the follow-through of that particular dynamic. Now what we're looking at is, if I show you, let me make it even bigger. If I show you the Dow monthly chart, you will see that there was a high made in April, and so in March, and in April it went fractionally higher. There's a technique that I use, in fact, in this book that I'm putting together. I call it a book. I don't know what to call it. Is it it's a tabulation? I don't know. It's a scorecard. I don't know what it is. But I've got maybe 50, maybe I haven't even counted, maybe 50 different techniques, from repeated carrot tops to right arm extension, etc. Then there's even one that says, where are we now, with a question mark. Sometimes you just, I look at thousands of charts. You can't have patterns that repeat over and over in every single chart. But then there's a chart pattern that I call the double top. It's where you get a substantial top made when in a monthly chart there's a high of, say, 80.23. And the very next month, you can't really see it if you don't do your homework and you don't write it in. Then there's a high of 80. Or 79.97, just fractionally lower. When you get two consecutive bars and the second bar is fractionally lower and it's a D, E, or an F, you've got to be careful in that monthly chart. I haven't yet done the homework, when it is fractionally higher. Somehow or other, I've observed, this is all observation, and I'm sure I could do a scan of this, but I don't know what the result is when you make it fractionally higher. So all I can say is that the jury's out. 12,525 is absolutely the key for the Dow to hold on any major pullback. Now let's do this. I'm going to run the numbers. Dow is down 154, 12,905. The comp index is down 39 at 3040. This is going to be important. The S&P is down 19 at 1379. Gold was up quite sharply, but it's only up 8. I have no interest in buying gold at this particular point, even though it could turn into a safe haven. But I just, I just don't see it there. I don't see it yet in the stocks. It's getting close-ish, but it's not yet there. I think people have to forget about gold completely, and then I'm going to be interested in it. I've just had no interest in, even the DZZ is probably a great trading vehicle. I didn't want my mindset to change. I want my focus on the Dow, the market itself, and then we can look at these peripherals, because sometimes you can be persuaded by other things. What is really important here is that bonds are up huge. You remember that 24-year bull market I spoke about? I want you to talk about that in a moment. When we get back, I'll also talk about high-grade copper and a couple of questions I've had that I will answer. 877-927-6648.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the Money Game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the Money Game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman here. There are so many things I would love to do, and it's just a matter of finding the time. It's not even the time. It's just a matter of finding the energy to be able to focus. One thing I started doing for the very first time in ages was sorting out all my music. I found some fabulous things that I'd completely forgotten about. Sorting out all my cartoons. There was a funny one that I found. I'd drawn a cartoon for the Flute magazine at some point, the International Flute magazine, something like that. And the cartoon was, and it's ironic that this is the 100-year anniversary of the Titanic, was this guy sitting on this big double bass, the contrabass, the bass fiddle. People have different names for it. For fun, I play bass. And out there in the ocean, and this boat is going down, and he's on the double bass, and he's there, and this woman's clinging on, and he turns to her and he says, "Thank God I didn't play the piccolo." And it reminded me, the folks that you had, that captain, that Greek captain of the ship. I don't remember if he was Greek, but the boat that went down in Greece, and the captain just happened to slip and he fell into the lifeboat, and he was saying, well, the musicians of the Titanic played right to the very end as the boat was going down. These are the musicians. This is not the captain. This is the musicians. There was a different age, but also within that age, which is so fascinating, because it was the age of the Great Gatsby. Later on, you got the age of the Great Gatsby, which was just 20 years later. Not even that. 1912. You've got 28, 29. You've got 15, 17 years later. You've got this incredible bull market and then the crash. But there was a period, and I've spoken about this very often. I think it's really important. I'm going to mention it right now. Take some time. I want to mention this. In 1934, there was a song that was written by Cole Porter. Now, I mention it very often. And every time I'm listening to, I really don't watch too many of the commercial shows on TV. But when I do, I usually like the comedy stuff. But when I do, I'm absolutely fascinated by the way the language has changed, how the decorum, how the respect for other people has changed. You can just about say anything on TV, and you can say, hey, okay, what's the big deal? I tell you what, there is a big deal, because you're bringing up children, and if children as a norm start to use four-letter words in their general conversation, there is really nowhere else to go. It takes a long time to start to, you try to apply for a job using those words. Okay, let's just put it that way. Okay, it's as simple as that. Now, there was a song called Anything Goes. In olden days, a glimpse of stocking was looked on as something shocking. Now, heaven knows anything goes. Good authors, too, who once knew better words, now only use four-letter words. Writing prose, anything goes. The world has gone mad today, and good's bad today. Just think about that. Even in our PC world that we're in, what should, just a barefaced reading of it, which should say to you, whoa, that is disgraceful, is now looked at as, hey, that's cool. Things are topsy-turvy. And black's white today, and day's night today. And most guys today that women prize today are just silly gigolos. So what's fair, he goes on, gigolos, so thought, I'm not a great, well, it's faded out here. So though I'm not a great romancer, I know that you're bound to answer when I propose anything goes. So that's part of the old-fashioned part of this last little stanza. But isn't it interesting? Just think about it. Think of the comedy shows that are on right now. It's as if they take, maybe people don't think much of it. I happen to have fun with that show, The Big Bang Theory. I think it's really cleverly written. But they keep wanting to move into the whole sexual aspect. Well, that part of it is fine, but there's an even funnier aspect to it that is, I think, really clever. That over a period of the next months or so, I'm sure just going to move away from it, and I would hate to see that. So it's really a fascinating period we're in, and I'm going to take the time over the next many weeks. I'm going to talk about the period we're in now, this period that I call the bubble in museums and new theaters, as well as the boom that's going on even here. I once again, I looked at my Zillow estimate on my house, and I can't believe where it is. So how do you put this all together? Is this a whole new age where we're just going to a spectacular phase, or we're really looking at a massive topping process? And the kids of today that know nothing but leather seats in the cars and whatever they sit on, the little babies, they've got to have little knee pads to even walk, and elbow pads and headgear. We'll talk about that over the coming weeks. We'll get back to the market straight after this.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. Dow's down 148, S&P's down 18. I was just rambling on about different things, but I do believe that for me, it was so clear back in 1986, 87, 85, 86, 87 actually. And that's in that chapter that I wrote about the Cadillac. And that was when the Cadillac and the General Motors products were just, they were probably the most pathetic. I use that word judiciously. Pathetic. Ever in the history of the company, the plastic parts of the engines. But that's also where I wrote that one day the Cadillac will become the premier American auto company once again, and the pink Cadillac will become the fashion statement. That was written 26 years ago. We'll see. So it's very important to me. Now, it's funny because I had an email from someone who never asks me about the market. Just never does. A couple of reasons. Kind of a family member. And I guess we have this kind of code that we don't talk business per se, unspoken. And asks, what are your feelings about the S&P over the next 5 years? Do you think that there is a realistic chance that it will drop to below 800? Any chance that it will be over 1,800 in 5 years? Of course, I don't know if your graphs and projections are that long term. Love to all, Peter. Now, I thought to myself, wow, isn't that interesting? Because that's the very question that I ask myself. I really could give you a case that if certain aspects come together, we could have a final blow off top that takes the market to levels you couldn't even imagine. And then instead of just a 3, 4, 5 year really poor period, we go in through a really long decade or more, a horrible period. And that's based on the fact that where else can you go when kids, little kids have so much protection? I look around, oh, a beautiful red robin. Isn't that pretty? And that turkey is still around, in case anyone's still remembering that turkey story, right there in the backyard the other day. So if you think about it this way, the youth of today are, I watched that movie the other night, my cousin Vinny. Funny, that was funny. That was swearing, but that was funny. If you think of the youth of today, the real little ones, who are growing up so protected, and you think, I read something today about these sisters were brought up, and in the Depression, where did they sleep? They slept in the chest drawers until an uncle could afford to get them little beds, little cots that they could sleep in. When you think of the market as a pendulum, going from ascetic, where nothing's working, is sparsity, to excessivity. That's a word I invented. Well, I didn't invent, but I started using and made up back at the time that I wrote this period of excessivity. I think that was even a chapter in that diatribe. Well, it wasn't diatribe. In that chapter that I wrote that was in this book, The Psychology of Investing. But the most important thing to me is that if, in fact, we're going to go from this luxurious period into, and obviously not everybody's going through a luxurious period, but basically when you look at the RTH index, the REITs, the RTH is the retail, S&P retail market vectors ETF, having gone to, well, I call it all-time highs, but it's not really all-time highs because it only starts back in June of 2002. But it's making all-time highs, and I've got to have to, at this particular point, I have no choice but to call it leg C. There should be a leg D still to come. That's an amazing thing. So, okay, enough with all this stuff. Let's get to the nitty-gritties. Apple, AAPL. Apple is at 634.04, having made a new all-time high today. Well, this is very interesting because what I discussed last week is that if I was to go with my 120-minute chart, although there was a leg D in the daily chart, the 120-minute chart, if it was to fulfill what is normal in the ChapmanWave, it made that peak A and then it made a B. It should make a leg C and a leg D. Well, today we made D in the 120-minute chart. The technicals, if you're looking at Tiger TV, that's that one right here in the middle. The technicals say the stochastics at 90% and the MACD is still good. And this is what I mean about the fund managers still doing the buying. Look, Apple is in leg D in the monthly chart. Leg F, I have to at this point call it leg F. I suspect it might turn out to be leg B, an alternate wave count, but I don't have any signals yet in the weekly chart to say that I must think of it as anything else but a continuation of peak D, E, and F. And in the weekly chart, in the daily chart, it's leg E, and the 120-minute chart is D. That says that if Apple at this point makes no new high from this moment on into Wednesday, but instead pulls back and dips underneath 618.60, the low of the 4th of April, then I'll say, okay, finally we can start that pullback. Why? Because the MACD is saying that the fast-moving average hasn't crossed over the slow-moving average, but the stochastic's still at 91%. That's why I'm saying that it needs to pull back those 6, 7, 8 points. I need to see it close again. It's done it only once oh my goodness, only once since, now how about this technique? From the 20th of December, Apple has only closed once. It was on the 20th of December, a month later, it closed under the 9-period moving average. I'm sorry, it did it twice. It was being covered up by the line. Twice, and then it gapped up. Twice on the 24th again. Twice under the 9-period exponential moving average, and only touched it on the 7th of March, and in fact closed under it again on the 30th of December. So that's 5 times since December the 20th? That is incredible. So if Apple closes 2 out of 3 consecutive days underneath the 9-period exponential moving average, it will have made a short-term top. Next one on the list is, I have to check, I'm sorry, I completely forgot to look. Right, there we go. RGR is number 2. You remember this is Sturm Ruger. Made a peak E-top with a doji. We spoke about that on Friday. It looks to me like it could pull back. And if we're able to pull back, a worst case is it starts to break and test the 45.11. It's at 49.64, down $1.33. So that whole area of the gap. Now, I said about 3 weeks ago that I'd start looking at gaps when we got some kind of a sell signal. Now's the time we can start looking at gaps. So Sturm Ruger breaks underneath 48, and immediately you can say that 45.11 to 42.92, that gap area will become some kind of a target, especially if the weekly is confirming that it's making a peak D. Third on the list is Alexion. Alexion right now is at 92.01, down $1.66. It looks to me like it could be making the dreaded H after a peak D doji top on the 23rd of March. The weekly chart made a doji, and this is now perhaps going to be the second week that it kind of break above the high of 95.01. If it takes out 95.01, that's really positive. It's going higher. But if it fails to do that, but it closes under the wick doji low 87.03 of the 30th of March, it keeps pulling back. I'm picking out these symbols because this is where fund managers, a question in the day, and Groundling asked, Basil, why do you pick out these symbols? I'm picking out these symbols because this is Investors Business Daily Top 50. I'm only going through the top couple that we're looking at right now. It means that money is still going into them. Look at GNC. GNC is GMC Holdings. It just recently made a high of an all-time high in leg B in the monthly chart because it was a fairly recent IPO. D in the weekly, and 36.10 was the high in the 3rd of February. But you can see even today on the dip, money keeps wanting to go in. But look, as far as I'm concerned, technically, this looks like it wants to trade down. And where's the gap? That gap is between 34.71 and 31.72. So that to me would be a short meaning 5 to 9 day target if there is a top forming here. Lulu, which has been an absolutely fantastic winner, and Lululemon Athletica is at 75.93. If folks are looking at the den, you see the 74.60 here. That was because that's because it's split. I love when stocks split and you look at them like you forget about them. You look at them about a year, 6 months later, and it's trading at 71.41. Right now it's 75.93. And you say, wait a minute, what's the 74.60 doing here? That's where it was in the monthly back in August, I guess it was, sometime in 2010. So when a stock splits, very often they go right back to that number they were at before the split, and they've doubled. So this is an incredible move. Now look at this one here. We've got Priceline, which is just refuses to give anything up. Talk about Apple. Priceline's been spectacular. Even today it's up $2.20 at $7.59. I remember I believe I heard Ken Shreve talking about it. I think it's one of in his portfolio. Fantastic, Ken. This is just what a beautiful chart. Priceline. It did this ChapmanWave falling axe formation after it made a peak, whatever that was, peak E, and now skyrocketing in a parallel wave of peak F/B. That is incredible. Priceline online sales. They see in the weekly chart. This is still looking very strong. That's the reason why I wanted to look at it. That's the reason why I'm saying that this is still a rotational market. If you look at the bonds, that's where I left off, remember, before the last break. If you look at the bonds, the TLT is at 115.76, up 2.86. That is spectacular. You made your dreaded H pattern. I spoke about this all the time for months now, I've been saying 109.82. You had that flag formation from 125.03 high, peaking in the weekly chart of the Lehman 20-year I-shaped T-bond front. It plunges down to 109.92. It should rally to a peak D in the shorter time frame, which it did. It was C minus in the weekly chart. That tells you come back, you retest. It went to 109.69 but never closed. It says that you can go to at least the previous peak, which would be 119.14. But if this bounce with the stochastic and MACD attempting to turn up continues, look at that 24-year bull market in bonds. And where is it right now? It is holding the 9-period exponential moving average in 1, 2, 3, 4, 5, 6, 7 months since it made peak D back in September of 2011. It's still... The bonds have still not closed below the 9-period exponential moving average. I mean, how about that? Is that not incredible? So when we are looking at this particular scenario, and when you get that unemployment figure like we had on Friday, which really tanked the futures, what it says is that the Fed is still going to be very squeamish, very nervous about allowing bond yields to climb right now, because although the housing market in certain sectors, and as I said, I have to say the Northeast, because I know firsthand that Brooklyn and certain areas around Manhattan and that whole area are just on fire. Other areas that are coming back, certainly in the Northeast, when the average in certain towns, certain cities here, in the Boston area, only saw a 12 to 15%, if that, decline over the last few years. That tells me that there's something going on here, and we have to assess whether the money is going to go back into the real estate, whether any very sharp decline in the stock market says to people, you know what, real estate is the place to go. Look how it's held up. That's what happened. You remember in the crash of the that actually wasn't a crash, the 55% decline from the 2007 and then the rally back and then 2009. That's what happened when the market was pulling back. You had real estate also coming back very strongly. But back in 2000, you remember when the NASDAQ basically crashed, 80% down or something like that? Real estate went up. That was the most unusual thing I've ever seen. If you go back historically in the United States, if you every measurement that you can get, I don't recall a period ever where there was actually a huge decline in the market, and real estate became the force du jour that took over the lead. That was very unusual. That's why you have to go through many areas here, and what I've been saying actually since the crash, that if you understand real estate, if you really know about it, absolutely, there's no reason why you shouldn't be buying, not necessarily to flip, but as an investment. If you have nowhere to stay, and you're looking for a house, you have a family, you want some stability, you don't look at the price of the house every day. If you're going to stay in it, and it's going to be a long time, whatever it is, if that's your comfort zone, you can afford it, get it. What I'd said before was flipping houses, that whole thing back in Florida, you remember? That's what I didn't expect to happen. If that happens again, this is going to be the most unusual time that I can recall historically putting the two components together. That is the stock market and real estate. I'll be back. Basil Chapman, 877-927-6648. And I'll be doing Larry's show straight after this. There I'll get into the currencies and other aspects.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I'm very, very strongly support support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks, and as I mentioned, I will be doing Larry's show. Larry's taking a break, and I'll be doing his show coming up straight after this. So stay tuned, and I will be going through the different currencies then and going through the different contracts that I'm looking at here. And also I'll get a little deeper into the TLT and the TBT, because I know Larry always talks about that. Now, I want you to go through a couple more things here. There are some stocks like LQDT, which was actually one of my favorites, and we just missed getting it. Every time I wanted to buy it, I don't know, I found either an excuse because I wasn't 100% sure at that particular point that it was going to rally, although I looked at it positively, and then it just shoots up. So it's one that I missed completely, but it was an IPO back in, let me just check here, back in 2006. Opens low was 10, and what had happened is it went through to peak A and then a peak B. Then it made another low. It made a low of 9. I think it was 8.66. Then it went to peak B and then failed. It made a beautiful left side, right side price time match in the monthly chart, and that time match went from key, right? No, actually it moves over there. It was that doji, I remember, right there, yes. And what happened was this bowl formation, like a wide cup, saw a one-to-one expansion from the low of 4.55 right through the breakout of 24.23, and it's now gone further than the one-to-one, which should have taken it to 44 to 45. It's now trading at 49.39, and today was a high, an all-time high. So how do you, this is liquidity services, online marketplaces and services for private and government reselling. And this says to me that if you are in a stock like this, which is just ignoring the market, it means that it's in a sector that is a niche sector that is very special, like a price line. It is doing well, and it is telling us that there is selectivity to this market, that you can hold stocks long, you can hold stocks short. Do not be afraid if your technicals say be short. Do not be afraid if your technicals say be long. But the longs need to have fairly either a tight stop, or your plan is to hold a position that you've had for a long time and maybe take something off and know where you want to put that back into work again on the long side. So don't be afraid. So let's just go through numbers here, because in high-grade copper is pulling back, and it's about to break the left side low bar, which is really important, of 3.7235. If it closes, it's a 7.190 on the, this is the June copper contract. If it closes under that, beware that it is telling us that the economies of the world at this particular point, and this is really what happens very often when all of a sudden the economists start saying, oh yeah, no, there's starting to be a job recovery and all that stuff. When this period of recognition comes, it's where you have to be most cautious. And the cautiousness will say that the support of 3.66, the 200-period exponential moving average on high-grade copper in the weekly chart, that is going to be key. Start trading for 1 to 2 weeks under that, and you will see this market not make just a 5 to a 7% correction, but it could be deeper and longer. So I'm watching this really closely. I'm quite satisfied that we are in short positions. I might want to add to the short positions. I don't necessarily have to. We are short the Dow via the DXT, but that's not the issue. The issue is how does the 12,900 to 12,870s and then that 12,700 area, will that hold this week or will it break down? That's going to be key. If it breaks down, we're looking at time and probably price if it breaks down in the next few days. If there's a counter trend rally, say by the end of the day, I don't think so, or by tomorrow to Dow 13,350s, sideways consolidation, even more selective. I'll be back straight off this for Larry's show. Stay tuned, and thank you for being here right now. Basil Chapman, the opening call, signing off for my show. I'll be back for Larry's.